What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So we've got a lot of very important information to cover in this update, especially after the crazy day that we had today with both AMC and GME. There's a lot of important things that we need to cover, specifically what's kind of going on with the short interest, the utilization, the cost to borrow numbers on both of these stocks. We also have to talk about the potential for a gamma squeeze coming up in the near future. A lot of people were asking me this question on the live stream today, and I just kind of want to give you my thoughts on what exactly I see on the options chain right now and what the potential is like to see that extra buying pressure get put into the stock due to market maker hedging. In addition to this, we also are going to touch briefly upon Adam Aron's tweets for this morning and whether or not the shorts started to cover their positions today. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you've seen it so many times in the live chats. A lot of people are absolutely printing with the 1348 strategy in the Discord crossover alerts. If you do want to learn about this strategy, make sure you check out the link down below to the Discord. We are still giving you guys free crossover alerts on 5 stocks in there if you would like to check it out as well. So when we're looking at AMC today, we closed the day at $18.08. We're up about 1.44% in the after hours. The after hours can get a little bit crazy. I am recording this basically just after market close, but there is something incredibly important on this chart that we have been talking about for a while that has finally happened today. Now, when we look at 1348 right here, the blue line is the 13 EMA, the red line is the 48 EMA. We finally saw one of these nice 1348 crossovers on the 4-hour time frame. But what we have not been able to do is even touch the 200 exponential moving average since November. November is when we broke below, and we have not come up to touch it since. When we see these types of closing candles above the 200 EMA, this is a very, very bullish sign coming along with that 1348 cross. But again, in order to get even more confirmation, we'd have to look at this a little bit on the daily time frame. We get that 1348 cross on the daily, which hasn't happened yet, and then the cross of the 200 EMA on the daily time frame at around $25.42. So make sure you guys are on the lookout for those types of things as well. Now, coming over to the Ortex update on AMC over here, let me just give this a quick refresh. When we take a look at what kind of happened today, we still have that listed 100% utilization, which I don't necessarily think is still entirely accurate. We have cost to borrow still stepping up a little bit, the maximum 3.54%, the average 2.63%, which is pretty solid, with 20.96% estimated short interest. Now, here's the one thing that I kind of want to bring up to you guys. Remember, AMC, GME, and a lot of these other stocks are all linked up together. They tend to move together. We saw it today with AMC and GME. GME up about, I think it was 30%. AMC up, let's see what the final number was, about exactly 14% on the day. And when we come over and take a look at GME's Ortex data right here, look at what we see. Short interest coming up, 23.75%. The maximum cost to borrow, 47.36%. This is starting to put a lot of pressure on these shorts. That is a very, very good thing to see. So as you guys can see here, a lot of these really good indicators and bullish, kind of not catalyst, but like bullish indicators are starting to really pile up. Now, we're going to go over whether or not the shorts kind of cover their position a little bit later, but let's start to get into this potential gamma squeeze situation because I think this is on a lot of people's minds right now. So first, the max pain is at $15.50 right now for AMC this week. Now, if you guys have been paying attention to my videos for any extended period of time, we look at max pain like a range. So if they are able to sell offsetting contracts, so let's say they are selling a bunch of calls, the market makers are the ones that are doing this, but you're kind of hanging around the max pain, meaning that that's the price that the most amount of calls and puts are expiring out of the money or worthless. If you can sell enough puts to counteract the deltas of the calls, you don't really need to go out in the open market and short shares or buy shares in order to delta hedge these sold options that the market makers are doing. But with the prices that we're seeing at right now, it looks like we're outside of that max pain range. So let's take a look at the option chain just for this week to kind of take a look and see what we're in for. So what we typically look for is open interest. Open interest are the amount of contracts that basically people and institutions are holding in their brokerage accounts at any given time. And when you look here, yeah, there's 10,000 at 16, there's 12,000 at 18, there's 11,000 at 20, but it's not any of the crazy numbers that we've seen in the past. But what we do see is an absolutely gargantuan amount of volume on these at the money and in the money strikes. And that is the most important thing here. The at the money and in the money strikes are going to be these contracts that are going to move the price to the upside, because once those contracts are bought, the deltas are going to be higher. See here, this in the money contract, the delta is 0.75. So the market maker would need to buy 75 shares for every single contract that they sold. And these out of the money contracts, well, they would only need to buy 19 shares. So these in the money contracts are providing more buying volume into the stock. Look at this, 18,000 in volume on these 16s, 12,000 in volume on the 1650s, 34,000 at the 17, 22,000 at the 1750, 50,000 contracts were traded at this $18 strike. Now, again, all of these contracts that were traded are not going to be basically filtering into this open interest tab tomorrow, but a lot of them will be. So we are going to be seeing a step up in this open interest tomorrow, and we're going to have to wait and see where we're at in terms of what we're looking at in terms of a gamma squeeze. But again, right now it is looking very, very, very solid. Now, before we talk about whether or not the shorts were covering any significant portions of their positions today in AMC, I do want to kind of go over some of Adam Aron's tweets today, because he put out some pretty awesome tweets. When we come over to his Twitter over here, we can see so amusing, narrow-minded call our Hycroft investment stupid or idiotic. AMC so understands how to raise cash and stretch out debt. Eric Sprott understands gold and silver, also fighting against manipulative short selling. Add in a very low price for our shares / warrants. Tons of crow eating ahead, and it won't be by me. And that was before market open today, before AMC even went on its run. So Adam Aron really is kind of coming after these shorts on Twitter right now. I think it's just kind of funny to see, and I do like to see these tweets. I think it's really good at boosting morale. Now, let's kind of get into whether or not some of these shorts are covering their positions. So when you see price run-ups like we saw today, yeah, it makes sense that maybe some of these really, really newer shorts that were maybe trying to push AMC down, in these price levels over here, if they were shorting kind of on these candles below 15, yeah, they might be trying to get out of some of their position over here, but not the shorts that have been in it for a while, and specifically not the ones, let's see, this is the daily time frame over here, specifically not the ones that have kind of been in it since this November drop when we were trading at around $41. Now, it is possible that some of those really, really large shorts have been in this for a while and since the beginning, and they are still around because they're able to kind of skirt the margin calls. They're able to kind of pay these essential margin fees and cost of borrows that have kind of popped up and escalated and came down over time, but eventually they're not going to be able to do that anymore. But let's kind of take a look back at the Ortex data for AMC to just kind of get a decent understanding of what could potentially have happened today with short covering. So we had 1.24 million shares that were returned. Now remember, shares on loan a couple of days ago was at about, or yesterday was at about 133 million. So it would make a little bit of sense that the returned shares would kind of affect the amount of shares on loan, but it hasn't really dropped any significant amount. Now, if there was significant short covering, this is what I want you guys to think about. And again, there were 1.18 million borrowed shares today. The net borrow was actually a return of 61,000 shares. If you were to see a massive influx of returning shares and shorts covering, one, you would see volume well above what we saw today at 76 million. We've seen volume days of 250, 300, 400, 500 million, even a billion back in not January of 2022, but January of 2021. So that would be another indicator that could kind of signify to us that shorts were covering. And the other thing is that if you were to see a lot of shares get returned, well, that would factor into the utilization and cost to borrow, because if there's no scarcity anymore in the securities lending market, you would see the cost to borrow absolutely fall through the floor. And that's not what we saw today on AMC or GME. We actually saw the opposite. The cost of borrows are continuing to go up. So that is mainly going to wrap up this update for AMC for you guys. That was an absolutely awesome day. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.